Good afternoon, and thank you for joining us today for our Blockchain Lunch and Learn. What is blockchain technology and why does it matter? I'm Amy Kim. I'm Chief Policy Officer at the Chamber of Digital Commerce, a trade association promoting the acceptance and use of blockchain technology and digital assets, representing over 200 member companies in this space. So as you come to this briefing, you may be wondering, why did Michael Saylor and MicroStrategy, a publicly traded company, buy $5.26 billion worth of Bitcoin? How did Jack Dorsey sell a digital representation of his first tweet for $2.5 million? How did a piece of digital artwork sell at auction for $69 million? Or why did China recently include blockchain in its 5-year plan and build a digital yuan for use in commerce and trade finance? Over the course of this hour, we will share with you the unique features of this digital technology, which is blockchain technology and distributed ledger technology, and some of the important and unique uses it brings to the global landscape, generating significant interest at home and abroad. Before we dive in, it's my sincere pleasure to introduce to you someone who's been a real champion in the space, and I'm not sure that he's joined us yet. So maybe what we'll do, Congressman Soto, who's been a real champion of this space, is going to join us for some introductory remarks. It looks like he may be tied up joining us. So we will get started with the program, and as he joins, we will bring him into the fold. So let me turn to our program for a moment. We have a panel of experts with us today to share some important uses for this technology. We'll endeavor to address questions at the end, so please use the Q&A function, and I will pull them in as time permits. So joining us today with our panel of experts, we have Yusuf Hussain, Head of Risk at Gemini. Yusuf will present on Gemini's educational resource, the Cryptopedia, and we'll give a quick background on what are blockchain and distributed ledger technologies and digital assets. After Yusuf, we have Azim Malik, Vice President of Business Development at Hedera Hashgraph, who will discuss how DLT is being used in distributing COVID-19 vaccines, as well as authenticating government documents. Matthew Yarger, Head of Mobility and Automotive at the Iota Foundation, will present on how the organization developed a DLT-based health passport that is being used for credentialing health data and helping in reducing the spread of COVID-19. He'll also share how Iota's DLT is being used for autonomous vehicle charging, energy credits, and data provenance. Kai Sheffield, the Senior Director and Head of Crypto at Visa, will discuss how Visa is working with stablecoin issuers for small seller payouts, enabling lower transaction costs and increased speeds in cross-border payments. And finally, Tegan Keel, US Practice and Climate Lead for Blockchain and Crypto Asset Services at KPMG, will show how companies are using blockchain to monitor, report, and disclose their carbon reduction and renewable energy transition efforts. So with that, and I think maybe the Congressman is still trying to connect. So with that, why don't we get started with our presentation? Yusuf, why don't I turn it over to you to discuss the Cryptopedia?
Thank you, Amy. If we go to the first slide, Gemini's Cryptopedia. Let's go to the next slide. Perfect. So what is Cryptopedia? Before I start with what is Cryptopedia, maybe I should start with why is Cryptopedia? Taking a step back, Gemini's mission statement is to empower individuals through crypto. And how do we do that? We believe the first step is to understanding the mechanics and utility of this revolutionary asset class. As a result, we launched Cryptopedia in February of 2021. Cryptopedia is a platform designed to facilitate the understanding of crypto by providing free, high-quality education to the world. Essentially, it's open access education. We believe we need to help educate the community and wanted to provide a trusted source. It's also a platform by which crypto experts can leverage to deliver a deeper level of understanding about specific crypto projects and initiatives to the public. By the numbers, we've got 223 articles as of today, spanning across 4 different categories from 28 different authors. The categories span across cryptocurrencies, security, trading and investing, decentralized finance, with topics ranging from Bitcoin's origins and fundamental technical structure to deep dives on other revolutionary cryptocurrencies to the basics of finance and risk management. Founders, leaders, technologists, and visionaries, these experts bring a deeper level of understanding about their innovative crypto projects. For example, we've got articles written by founders and leaders, visionaries from organizations and projects like Brave, Aave, Tezos, and more. You don't need to have a background in crypto or in finance. These are easy to pick up and read by any layperson and caters to all levels of knowledge and interest. I'm in crypto day in and day out and find this resource as a helpful utility as well. If we go to the next slide, what is blockchain? Simple way to explain it is it's a shared ledger of data chunked into blocks that is validated by a network of distributed users. That's essentially what it is, but to make it more real, instead of having a central ledger of information controlled by one counterparty, which is the world that we used to live in, imagine the blockchain providing a mechanism by which data is stored on a decentralized peer-to-peer network that is secure, resilient, and available over the internet, which is the case with public blockchains. So blockchain can trace its roots back to cryptographers in the early 1980s, but modern day blockchain industry began with Bitcoin. Some of the key features of blockchain technology include that it's constant, it's fast, it's secure, it's inexpensive, and it's tamper-proof. Constant, imagine banking services that are available 24/7, not having to wait the next business day or waiting to execute a transaction during business hours. Fast, imagine not having to wait 5 days for your fiat to fully settle, as is the case with ACH transfers, or waiting 2 days, or not waiting, but full settlement of securities in 2 days. Bitcoin transactions typically during periods of non-congestion can settle as fast as 10 minutes. It's secure because it's decentralized. It is crypto-based, cryptography-based. It is a collective, the decentralized network provides a collectivized security mechanism to protect against hacks and provide resiliency to prevent any sort of outages. It's inexpensive. Blockchain reduces the reliance on multiple intermediaries due to its decentralized natures, which bring about cost efficiencies to not only the organizations that have implemented the blockchain technology, but also to the end users. It's also tamper-proof in that data is transparent and cannot be modified. It's time-stamped and publicly viewable on the ledger. We move on to the next slide. Blockchain has limitless applications from finance to supply chain to real estate to even gambling. It is a disruptive technology that can revolutionize any and all industries. We'll dive a bit deeper on those specific use cases a little later with the panel. You know, as mentioned on the slide prior, one of the benefits of blockchain technology is that it can disintermediate expensive third parties, right? It's once again, multiple counterparties, intermediaries that may be involved in the flow of potentially any process or business can be made more efficient through blockchain technologies. It's suited for a variety of things, including payments, and you know, facilitated through crypto itself, or even stablecoins. And in recent weeks, we've seen an emergence of interest in non-fungible tokens, which lend themselves to unique art pieces and collectibles. Think of it like the digital baseball, basketball cards, or digital art with a chain of ownership that is non-repeatable. If we go on to the next slide, there's different types of blockchain technologies. They fall into three major buckets, if you will. You've got proof of work, you've got proof of stake, and you've got private blockchain technologies. Proof of work will be most familiar to folks that are aware of Bitcoin. It requires energy in the form of electricity to be expended, to make calculations, to validate Bitcoin transactions. It is energy intensive. Proof of stake solves for a lot of the disadvantages that are presented by proof of work. The way I like to think of proof of stake in traditional finance, you've got shareholder proxy votes. You hold a number of digital assets, and you can go ahead and affect governance changes, votes, and reduce energy consumption through proof of stake. And then you've got private blockchain technologies that are controlled by centralized entities and can interact with public blockchains. And if we move on to the last slide, definitely go check out Cryptopedia at cryptopedia.com. We hope it becomes your go-to resource for all things crypto. Thank you.
Thanks so much, Yusuf. That was, it's really an incredible resource. I'm so glad that you were able to share that with us today. And there's a lot more on their website to learn. So for those of you who are curious about this technology, please check it out, and their web link is right there. So now, before we kind of dive into our expert panel, I really would love to introduce someone who's been a champion for this industry for many years, Congressman Darren Soto from Florida's 9th District. He serves as a co-chair of the Congressional Blockchain Caucus and has been a true champion of thoughtful, responsible innovation in this space from the technical side, from a U.S. competitiveness side. And Congressman, we really appreciate all that you've done for this industry, and welcome you to joining us today.
Thank you so much for this great opportunity. I think it's really important that you all are working on the basics as well as going into the more complex issues related to blockchain. We know at its essence, we're talking about a fixed ledger technology, which really makes sure we have integrity of information, right? That's the real key, given we live in a world where there can be a lot of ability to skew or to alter information. And of course, this has various different applications, whether we're talking about financial, which most people are familiar with, but also communications, research and development, consumer protection, and food safety, among other applications. You add in now AI, artificial intelligence, to review some massive amounts of data in a fixed ledger, and you could start resolving some of the most complex issues facing both our country and our planet, whether it's the delivery of healthcare or funding under the newly passed American Rescue Act, whether it's addressing climate change or even combating COVID. We saw supercomputers in the Department of Energy pour through thousands upon thousands of antiviral drugs, only to narrow it down to a little over a dozen, one of which was remdesivir, the first therapeutic approved. So we know as we utilize blockchain along with artificial intelligence, we can tackle some of the greatest issues of our time. One of the themes you'll hear over and over is about the importance of educating the Congress. We have, Congress is old. Not everybody understands what blockchain technology is, or applications like cryptocurrency or communications or some of the other things we discussed. So that's going to be one of the most important barriers we face as we work with you as Congressional Blockchain Caucus. We're leading the charge on several key issues. One that we're really excited about is establishing a center of excellence, something we've worked with the Digital Chamber on, and we appreciate all your input on that. Others, you know, in the vein of light touch regulatory regimes being put in place to create certainty and, of course, to promote innovation. We're hoping to do some blockchain bills related to and events related to social good events, like how we do food tracing, for instance, or utilizing cryptocurrency to help small businesses provide services across the world, or even families being able to do remittances back in their home countries from the United States. But we're going to need your help. We know the challenges. I was disturbed to find out that about 50% of startup costs for many blockchain firms are going towards legal. Now, as an attorney, you know, I certainly can appreciate that, but that's not the way we want it to be. We want that to be utilized on research and development for the most part, on personnel, to really get these technology companies up and running. And we need a coordinated government approach to blockchain research and development that'll complement both the private and public sector innovation. We have a couple of legislative wins from the last term. The first was that we passed the Digital Taxonomy Act and the Blockchain Innovation Act. That was part of HR 8128, the Consumer Safety Technology Act, out of the House last term. It did not pass the Senate in time. We passed it in late last year, but it was the first blockchain bills to actually pass the House as legislation. And they do two very similar things. One is requesting the Federal Trade Commission submit to Congress a report and make legislative recommendations on how to further provide consumer protection, as well as promote innovation in global digital token sectors. And then the other directs the Department of Commerce to do a similar thing, study and submit to Congress a report on the state of blockchain technology and commerce, including its use to reduce fraud and increase security. All these reports, because things take so long in Congress, people have many questions, and we get it. We're writing laws for the whole nation, the most powerful nation in the world. These will set the table and have the information for us to be able to do our larger goals of the Digital Taxonomy Act and the Token Taxonomy Act, which is establishing jurisdiction of the FTC, CFTC, SEC, and Comptroller of the Currency, as well as establish a new asset, a digital asset. And we haven't established new financial assets in decades. So setting up this long-term goal is going to be critical. We're really excited about the Center of Excellence. We know there are abilities to utilize blockchain through both commerce and the military, through the Department of Energy, USDA, through IRS, and so many other ways. And so having a Center of Excellence in commerce to help coordinate all that is critical. Serving on the Energy and Commerce Committee, most of these bills go through our committee. So we're well positioned to be able to work with you all. I just want to go over, we have had some other major wins, but most of it has been through the budget. You know, the Congress passes a nearly $4 trillion budget every year, in most years, in the years since I've been there. And that's where we've had most of our early wins working with the Digital Chamber of Commerce. First, we were able to get that updated IRS advice and tax guidance on de minimis transactions. I know something that was really important to a lot of you. We also were able to establish consumer protection and cryptocurrency protections from fraudulent marketing of crypto projects with the SEC and FTC through programmatic language in the budget. We also have energy and blockchain requests to better coordinate research and the need to use new blockchain technologies and the modernization of our electric grids. One of the biggest ones that has gotten a lot of traction is the amendment we've got in 2 appropriations packages running about food traceability and utilizing blockchain through the FDA and the USDA to trace drug supplies and food tracing so that we can keep the integrity of our food supply, of our pharmaceutical supply, to make sure we're protecting Americans from illness. We're also working on defense and blockchain. We got into the original National Defense Authorization Act that passed the House, making blockchain one of the qualitative military edge technologies that would require the military to continue to make sure we have the best technology with relates to defense, which is primarily in cybersecurity and in communications among our troops. That did not pass the Senate this year late last year, but we're going to try again. We had a lot of support for that as it passed the House. As you could see, these long journeys to educate Congress and really work on both appropriations and work on new policies. Lastly, we had a blockchain technology amendment that did pass regarding the National Defense Authorization Act, requiring briefings of the Armed Services Committee on the current use of distributive ledger technologies, otherwise known as blockchain, to help out with educating the members and requiring a report. They met with us a few months ago to help fill out that report and the benefits of consolidating research in a single hub or center of excellence within the department. So these are all exciting developments. Let me just end where I began. It's all about integrity of information. It's all about, in the uncertain times of the internet and the ability to alter information, whether it's financial transactions or research or any number of other uses, blockchain creates that integrity of information. And that's so important as we see more and more things go online. We see the United States subject to more and more cyber attacks. We see more abilities to be able to communicate more rapidly, more abilities to be able to protect our information and then utilize supercomputers, artificial intelligence to review vast amounts of data that would take a group of humans with the limitations of the human mind hundreds of years to analyze. They could do so in a matter of hours. So all this together shows that we have a lot of hope for this technology and a big vision for its future and current roles, both in the United States and across the world. So thank you for having me today and to be able to discuss some of these exciting developments in the Congress.
Congressman, thank you so much. I couldn't agree with you more on the integrity of data that you've described. And I think we'll see as we go through some of the uses of our panelists that they touch on exactly that issue, integrity of data as you sort through things like vaccine distribution or climate change and things like that. So you're doing such important work in Congress and really appreciate all that you're doing.
It's my pleasure.
So now let's turn to our panel of experts. Let me turn to Azim Malik. He's with Hedera Hashgraph, and he will be presenting on COVID-19 vaccine distribution, exactly what the Congressman was talking about, and a couple other things. So Azim, over to you.
Thank you, Amy. It's a pleasure to get the opportunity to present to this distinguished audience. Hedera has enjoyed a great relationship with the Chamber, and they've been a strong advocate for our industry through both thick and thin. So thank you to Amy and Div and Perianne and for all the work that your team does. Today, I'm delighted to tell you a bit about who we are and to highlight a few use cases and applications of our technology that are interesting and also focused on solving for the needs of different government agencies, both here in the US and abroad. So if you could go to the next slide, please. So I'll start by telling you who we are and kind of why we exist. We're a publicly available distributed ledger network, or a DLT, and we built the Hedera network around the Hashgraph consensus algorithm, which was invented by our co-founder, Dr. Lehman Baird. And he, together with our CEO, Mance Harmon, founded Hedera after years of working together in both the private and the public sectors, including at the US Air Force, where they taught computer science at the Air Force Academy and worked on artificial intelligence initiatives and the missile defense program. The properties of Hashgraph allow the Hedera network to process tens of thousands of transactions per second with near instant guaranteed finality and the stability of fee predictability, in that fees are denominated in US dollars and don't fluctuate based on what's happening on any external events. Our network is also not a proof of work, which Yusuf described in the previous session. So we achieve near perfect bandwidth usage efficiency without leaving much of a carbon footprint. we built Hedera Hashgraph as a next generation distributed ledger technology to power the enterprise and the government workloads of the future. Next slide, please. I'll describe very briefly what our network looks like. Our product is pretty simple. It's a set of leaderless nodes that stay in sync using the same Hashgraph algorithm. Users can plug applications into the network through our network services, and I've highlighted 2 of them here. The Hedera token service, through which any token issuer can define and issue a token native to Hedera, whether that's a fungible token, a non-fungible token, or an NFT, a stablecoin, even a central bank digital currency, or anything else. And the Hedera native token inherits the performance and the scalability and the security properties of the Hedera network. We also feature the Hedera consensus service, which functions as like a consensus as a service for any type of application and provides that data integrity that Congressman Soto was talking about through fair ordering and timestamping. So the 2 use cases I'll be highlighting today will focus on the consensus service, but that's pretty much Hedera and the network and the services that are overseen by the governing council. Many different application types can be built on top of the network for many different types of end users. Next slide, please. Speaking of the council, we wanted to make sure that enterprises could trust our network because superior technical benefits alone don't earn trust. And what better way to earn enterprise trust in a network than to have the network governed by large leading global enterprises? And we believe governance is a critical piece of the puzzle for the long-term success of distributed networks. Who is making decisions? Who gets to decide on new features? Who has the ability to influence spending decisions? And those are important things, and we believe the importance of those decisions will become more evident over time. So you can see here the logos of our governing council members, some of the largest and most respected institutions across various industries and geographies, spanning 6 continents. And these are also the entities that are running the nodes on our network. Next slide, please. So now I'd like to talk about a really cool use case that's timely and one we can all relate with. Over the next few months and years, billions of COVID-19 vaccines will be distributed across the world to billions of people. And as we know, these vaccines have certain cold chain requirements that, if not met, can compromise the quality of the vaccine and in some cases render it useless. So we're working with a company called Everywhere. They're a digital asset monitoring and tracking startup in the UK. And they're working with the National Health Service, or the NHS, to track COVID-19 vaccines along their journey through the cold chain in the UK. So their sensors are attached to fridges that are monitoring temperatures and reporting measurements out frequently to the network, to the tune of about 500,000 transactions per day, which is more than 5 per second. Everywhere is using the Hedera consensus service as that data integrity layer to keep an immutable and a tamper-proof and a verifiable record of that sensor data, where all the participants in that ecosystem can verify that the temperature thresholds have not been breached and that the source data hasn't been tampered with. Next slide, please. So now let's move on to notaries and something called apostilles. So Hedera is headquartered in Richardson, Texas, and has been involved with the work that the Texas Blockchain Council is doing. TBC is a wonderful and forward-thinking group based in the state of Texas that's looking to promote the adoption of blockchain technology at the state level. And COVID-19 taught us that it matters who is representing us at the local and the state and the federal levels. We may have thought that we didn't need to worry about some of that stuff before, but it's clear now that we do. And so through our work with the Texas Blockchain Council and in talking with state legislators, they're really laser focused on how to make the state more attractive to entrepreneurs, to bring businesses in, and really understand the importance of incorporating cutting edge technologies into the state workflows. Not only because other countries are doing it and posing a competitive risk, but because it's a good idea. And I personally live in the state of New York, and in my personal experience after speaking with local politicians and reading transcripts from legislatures and state assembly sessions, they're not focused on the same things, and maybe they should be as much. So Highland Credentials is a company based out of Texas. It's a subsidiary of Highland Software, and their business is around providing digital, secure, and verifiable credentials on blockchain. So Hedera has worked with Highland to develop a proof of concept for the Texas Secretary of State's office around the e-apostille, or the digital version of the apostille. You may be wondering what that is, because I didn't know when I first learned about this use case. An apostille is a certification provided under the Hague Convention for authenticating documents across foreign countries. It's like a notary, except it's a certificate issued by the Secretary of State that authenticates the document for use outside of the jurisdiction. Today, the acceptance and the return of paper documents is manual, it's time consuming, and it's inefficient. And what Highland has done is to digitize that workflow and create an immutable record of the creation of any certified document through the Hedera Consensus Service. And this prevents fraud, and it allows for the seamless validation of official records like identity documents and credentials. So with that, I believe I'm over my time and would love any questions.
Thank you, Azim. Just give the panel an opportunity to ask any questions of you before we move on to the next presentation. As I said before, please keep questions coming in the Q&A. We will get to those, hopefully time permits at the end.
Yeah, super interesting, Azim. I'm curious what kind of other types of applications you're seeing governments, particularly across the world, that are interested in, and then, how do you position Hedera as kind of why governments are more interested in Hedera than some other nodes?
Yeah, absolutely. We've seen interest across several different agencies, both in the U.S. and abroad, in terms of really meaningfully engaging the private sector, specifically startups, to help address some of these needs. So these span several different areas, from health records to vaccine passports to decentralized identities, supply chains, food security. Looking at distributed energy options, payments, of course, central bank digital currencies, the provenance of government grants, the real-time auditability of government funds, grant funds. So really a number of different things. I'll tell a story about a meeting I had with an individual at one of our government agencies in Washington in January of last year, before COVID, who candidly told me that the government isn't going to be ready to even talk about public networks, Azim. So, thanks, but come back in 3 years. And I could sense his frustration with the pace of things. It wasn't a statement on the value of public DLT, more as it was a realistic assessment. But I think COVID has accelerated many things. And one of those is interest in this technology. And I think a growing acceptance that we are really moving forward into this completely new computing paradigm, and that it is in everyone's interest to, both here and just from a geopolitical standpoint, that the US demonstrates leadership and makes the right investments to make the country more competitive for the future. In terms of Hedera specifically, I mentioned the performance and security and governance. And while we do have council members all over the world, in fact, most of our council members are headquartered outside of the US, we do have a uniquely American story. As I mentioned, we're headquartered in Texas. Our co-founders have served in the US Air Force and contributed greatly to both the public and private sectors here. Many of our employees are also in the US. And we try to do things the right way. Our approach has been different from other networks. I think some other projects in their communities talk about a future where, if you kind of play it out, there doesn't seem to be a future for enterprises or even governments in some cases. And our ethos has been to work with enterprises that come together and collectively define what the enterprise of the future looks like in this new paradigm.
Thank you, Azim. That's such a great point. And thank you, Kai, for that question. Let me turn now to Matt Yarger with the Iota Foundation and learn about their use cases. Matt?
It's not letting me start my video. There we go. Okay. Hi, everybody. I am Matt Yarger. I am the head of mobility and automotive at the Iota Foundation, but I also work with smart cities, public regulatory environments, and a number of other areas. A little background on myself before I joined the Iota Foundation about 3 years ago. I was a federal government employee as well. I worked at the National Security Agency for 8 years doing cybersecurity and cyber operations planning. I was part of establishing what is now Cyber Command. And after that, I worked at the Department of Defense Cyber Crime Center, where I did digital forensics and blockchain research. Next slide, please. So for a little bit of information on the core of what makes Iota unique and the way we approach to the distributed ledger technology problems. Our founders have been involved in the space since 2010. They were involved with Bitcoin very early on. They were involved with Ethereum and Cardano and a number of others. Our founders innovated the first proof of stake blockchain, which was NXT. And so they've been very innovative in this space for a very long time. But when they had that transition, one thing that became very obvious was proof of work or proof of stake. Scale is still hard. And scaling to something that is production ready and can actually operate in a fully production ready environment is something that we've seen very difficult to accomplish with traditional blockchain capabilities. There are multiple different benefits from taking a centralized capability to a blockchain capability, but there's also multiple benefits of taking something centralized and progressing through blockchain to something more scalable. And with Iota being the first directed acyclic graph, or the first innovation of architecture on blockchain, that's one thing that we really try to address at our core. We like to say if we can't support 8 billion people or 800 billion devices, then the scale's not there. So that's our mission in a nutshell, is get to the level where you can have a permissionless capability that can support everyone globally and every device to change security, to change infrastructure, and to create real use cases that do more than just transfer value. Next slide, please. So this is an insight into what our network looks like. Some key aspects of it, because we changed our architecture, the bottom left is an image of what that actually looks like in motion. So all transactions get issued in real time. The proof of work is a decentralized proof of work structure where every participant on the network contributes equally. And scaling that out to that level and that ability to be so lightweight has completely changed the energy capabilities, which we see as a big issue in today's solutions. So some of our current energy benchmarks put the ability to send 167,000 transactions on the Iota network for the energy cost of 1 US cent. That comes out to about 450 million transactions for the cost of 1 Bitcoin transaction. So the energy consumption, the lightweight ability to actually integrate that into real solutions is very real. And the scalability, of course, comes with that, with thousands of transactions a second being where we need to go with the current benchmark of, I believe, 1,600, but with another benchmark coming out next month, which is going to be much more dynamic. One of the other aspects is on pretty much every other blockchain that we've seen, you have to send value to send data. And in a digital world, data is the lifeblood of what we're using, of what we're creating, and the services that operate on the internet. Tying that to a requirement for value transfer or financial transfer is extremely limiting to bringing something to production and large scale adoption. So with Iota, we took that and parallelized it. We have said you should be able to send 1,000 data transactions that create a use for value and not just send value to send data. So the incentives and the structure of our network are very different. The applications and the solutions that you can build on top of it are also very different. Next slide, please. So this is a graphic that kind of helps cement that. With the blue line that you see going around the bottom, that's the traditional route that data takes. When you have an app on your phone, it pulls data from the cloud in a traditional instance. Lately, we've seen issues with that. That's a centralized structure, even though it's on a cloud instance. Last year, we saw Tesla owners get locked out of their vehicles for 2 hours. That's because the cloud that supported their mobile application was down. We've seen people get locked out of Microsoft Teams, multiple other services go down because Azure or AWS or Google Cloud or what have you have gone down for periods of times in their region. So then you have a digital service that's no longer available. What we've built out with partners like Dell and Intel and a number of others in this space is the ability to have applications that operate at the edge, that are very lightweight, that can run through a mobile application or a desktop application for a number of use cases, and have that ability to use data to give inherent trust and confidence in what the application is built on. So you can have that happen at a local router, at an edge server, or at the cloud. It doesn't have to rely on a centralized backend. And what you see with most other blockchain architectures is that their nodes are very heavy, or their infrastructure is very heavy. So you have to run that on the cloud. And if you can't run it at the edge, then that's also a central point of failure, a single point of failure. Next slide, please. One instance of using data is what we have with an application framework known as Self. Self is our health passport or health certificate platform. We've built it out as a demonstration. We've scaled it out with a number of partners throughout Europe and the US. But it builds out the existing standards from W3C around decentralized identities and a permissionless framework. So this allows you to take data and control and own the data that's used. When it comes to health passports, this is a very critical area of focus, because if someone is controlling your health data, that's an issue. You want to have control over that. You want to have control over who has access to it, and you want to have control over who can see it or has control over it as well. So storing that locally in a mobile application and adding resiliency on the back end is something that happens with the Self application, and the data capabilities give you a privacy-centric way of doing that. That's aligned with GDPR, CCPA, and a number of other data privacy regulations. This is scaled out in Germany already with some partners that we have like Uberch. They're working with IBM to do this potentially at a national level throughout the EU. Next slide, please. There's a number of other use cases that you can see from a critical infrastructure point. I work very closely with our mobility partners like Jaguar, Land Rover, and a number of others, where we're figuring out how do we take this, these data capabilities and these security capabilities and allow for resilient public infrastructure to be hosted so that vehicles can start to communicate in an efficient and secure way. And then how can we do that at scale at the edge or in different use cases? We've also done this in energy infrastructure, where we're working with the City Exchange Consortium in 13 cities throughout Europe, as well as TM Forum, which is a very large telco consortium that we're involved with. This allows you to buy and sell data directly from your home to another home. It also allows autonomous balancing of grid infrastructure when it comes to electrical grid. So with things like what we've seen recently in Texas, a solution like we've done with the decentralized energy infrastructure would have been incredibly useful. And then we also have this ability that we built out with Dell, Linux, and now Intel is coming to the picture with us, where you can create the capability to have intrinsic trust and confidence in your applications. When it comes to public services, you need to have trust in your data, and you need to have security built into that framework. And that's what we do here. And I believe that's my last slide, right? Next slide.
Yep, I think that is. Thank you, Matt. I appreciate that. That was really interesting. And maybe what I'll do, I know we're just trying to have a quick panel question in between. We're kind of running long on time, but there was a question that asked, why a blockchain for these use cases? And I think you kind of answered it, but maybe I'll just tell me if this is a fair statement, which is it allows for no central point of failure, and it offers data integrity with cryptography.
Exactly. Yeah, it allows data ownership. It gets rid of these single points of failure, or at least makes them absolutely minimal. And in a security perspective, it makes the target much smaller. So there's not as much of a target like a giant cloud infrastructure for a bad actor to come and target and get access to everyone's data in a central location.
Yep. That's wonderful. Thank you so much for sharing that. It's really a lot of interesting things that I think people don't necessarily think about for blockchain, but it's perfectly suited in DLT. Let me now turn next to Kai Sheffield from Visa. Kai, over to you.
Thanks, Amy. It's great to be here. And so to start, when most people think about the intersection of Visa and crypto and stablecoins, the first thing that comes to mind is how will crypto change the way that I spend at a merchant? Will I be buying coffee in stablecoins? But what we've seen is first, we think a lot of the really interesting opportunities for these new technologies are in new payment flows that are much more complex and more challenging than just existing consumer to merchant retail payments. And for Visa, we've really been evolving our business, looking at how can we add value to many different types of transactions. And so when we look at the over $100 trillion that moves in B2B payments that are still predominantly check and bank wire, we think that there could be some really interesting opportunities for stablecoins to create more efficient, particularly cross-border B2B payments. So we really, as we started seeing the stablecoin ecosystem grow, and it has continued to grow rapidly, we were looking at kind of how are people using stablecoins? How are businesses using stablecoins? And what we found is that they've started to emerge as really a new type of treasury infrastructure. And this happened and is still happening today, mostly focused on what I would call crypto native companies. Crypto startups, which are kind of new, innovative small businesses, they are building products on top of stablecoins, and they're using stablecoins as their corporate treasury. And so just an example of what we're seeing right now is there are investors who will invest in a venture fund by sending stablecoins to it. A venture fund will disperse an investment to a startup by sending them stablecoins. That startup will hold stablecoins in their treasury and then pay remote employees and then pay vendors. And so we're starting to see these really dollar-based economies outside the United States built on top of stablecoins that are beginning around crypto native, innovative high-tech companies. And we think that that is a very good thing for the United States and a very good thing for the dollar. But then we started looking at how can this transition from, instead of just high-tech crypto native companies, how can other businesses start to leverage stablecoins? And so we really narrowed in on this use case of cross-border marketplace payouts. And so every one of us transacts with a marketplace online, whether these are e-commerce marketplaces or whether these are content marketplaces. Think of music streaming or video streaming. And it's not difficult today to be able to purchase an item from a global e-commerce marketplace as a US consumer. The challenge really is, how do these marketplaces make payouts to small sellers or freelancers or content creators who are in 100 different countries across the world? And traditionally that required building out a whole payments team and looking at market by market, what does it require to do bank wires that can arrive to Nigeria or to Argentina? What is the cost? How long does it take? And there are a number of inefficiencies around moving funds cross-border, particularly when you're doing so in small amounts. If you want to send $10, if you're a global marketplace and you have a seller who makes quilts in Nigeria who wants to access US consumers selling on that marketplace, how do you pay $10 to that small seller in Nigeria? That's traditionally been very difficult to do. So what we did is we really partnered with Circle, who's a leading stablecoin based payment platform focused on one of the fastest growing stablecoins in USDC, to explore different ways that marketplaces could take advantage of USDC to solve some of these really complex payment challenges. And so what we saw were that e-commerce marketplaces now have the ability to interact with a platform like Circle, deposit dollars into Circle that are converted into USDC, and then make global payouts to small sellers or freelancers all across the world in USDC that can arrive to a USDC compatible wallet. And so we've seen the growth of many new digital wallets that support stablecoins like USDC, and Visa's been focused on how do we bring those into our network? How do we ensure that they have compliance programs? How do we vet them and then help them issue a Visa credential? And so if we live in a world where there are hundreds or potentially thousands of digital currency wallets all across the world, we want to make sure that there's a subset of those wallets that meet a very high standard to be able to join the Visa network. And so the goal is, how do we create experiences where a business, a marketplace, can be able to use USDC as their B2B treasury infrastructure and be able to make automatic payments to small sellers in 100 countries across the world. and have those sellers receive those payouts to a digital currency wallet that is a part of the Visa network. And I think these are the type of solutions that have the potential to grow global GDP. If you can get funds to small sellers all across the world faster, those sellers can invest in creating more goods, in making those goods available on these platforms, and that grows these platforms. So we think rather than looking at crypto and looking at stablecoins just with the mindset of what does this mean for me as a consumer buying my coffee and paying a merchant, we have to flip that around and say, what does this mean for the largest platforms that have global businesses that have to figure out how they can disperse funds across them? And that's where we see significant opportunities for stablecoins.
Kai, that's super interesting. And, I think what you've just touched, in a time when diversity of access to financial services and more inclusion into the financial system are so important. You just touched on low cost, speed, and efficiency are the keys to that. It sounds like that's exactly what you're looking at.
Absolutely. And the last piece I'd add is that we think there's increasing demand for global sellers to get paid in dollars. And traditionally, it's been hard to be able to pay someone in Nigeria $10. If you can start to utilize these new stablecoins, it can increase demand and power for the dollar through these global marketplaces, which we think is a great thing for the US.
That's fantastic. Thank you for sharing that with us, and look forward to seeing that network grow. Let me turn now to Tegan Keel with KPMG. Tegan, over to you.
Thanks so much, Amy. It's exciting to be here. I know we work really closely with the Chamber a lot on our crypto asset side, so it's exciting to sort of be here and be able to talk about what we're working on the other side of the house. If you can go to the next slide. So I don't think it's going to be news to anybody that obviously ESG and climate are an incredibly important and much discussed topic these days at the corporate level. Over the past year and a little bit more, we've seen a rush of companies sort of making commitments to the environment in some way, a lot of carbon neutrality or carbon negative or net zero by 2030, or pick your favorite date. Biden, in his initial executive orders that he released in his first couple of days, sort of tried to commit the US economy to being net zero by 2050. And so we're sort of seeing a lot of pressure, both from customers, from investors, for companies to be a little more cognizant about the impact that they're having on climate. And it's sort of our hypothesis that pretty soon your climate disclosures are going to be looked at in a very similar way to your 10K or your financial statements. And so to that end, what we've been working on for about the past year is something we're calling climate accounting infrastructure, which is intended to help companies understand where they are on their journey toward net zero or their carbon or climate goals. And there's sort of two big pieces of that. One is understanding your emissions and where they're coming from and how to decarbonize. Those are sort of the debits of climate accounting. And the other side is the transition to renewables. And again, this is obviously something that in the climate executive orders that came out is being heavily incentivized right now, is investment in renewables. And those are sort of the credit side alongside offsets. And so what climate accounting infrastructure endeavors to do is sort of get highly granular, high fidelity data from actual physical tangible assets. So whether that's a building, it could be a pipeline, it could be a well, it could be a wind farm or a solar panel, and record that on blockchain and use that data to get a very granular and reliable view of a company's overall emissions footprint. So there's, we're using IoT data from sensors. As the congressman mentioned in his opening statement, we're also using AI and machine learning to do smart things like know when to turn an HVAC system in a building on or off in order to reduce energy consumption, which therefore then reduces emissions. And a big part of what we're focused on is also taking all of that data and interpreting it according to the frameworks that exist for publicly disclosing this. Again, a lot of this is being done voluntarily now, but pretty soon, again, our hypothesis is that this is going to get looked at very similar to financial data, in that someone's going to ask, sort of, how do you prove that what you're saying your emissions footprint is the case? And then obviously the second part of that is being able to track your progress toward your net zero or carbon goal. And so if we go to the next slide, I'll talk a little bit about, and I'll try not to get sort of too into the technical details on how this all works. But what we're really doing, as I mentioned, is trying to plug in at the asset level to record both the renewable energy data that is being generated, as well as plug into the tangible physical assets to monitor consumption in order to come up with sort of an overall footprint. And then again, that's sort of being used to manage internal measurement. So again, how are you progressing toward your climate or net zero goals, as well as your external reporting, whether that's to your customers or your investors. We're obviously increasingly seeing, especially in the financial services space, a lot of focus on what your ESG scores are as an investment. And then lastly, sort of the AI and ML piece, which I mentioned before. And I know we're running short on time, so the last piece I'll mention is sort of the other half of this equation is, as we have all of these companies sort of moving toward being net zero or carbon negative or carbon neutral, we're sort of also anticipating the idea that there's going to be higher demand for some sort of renewable energy credit or carbon credit exchange. And so the other side that blockchain can help support there is actually managing the transaction of those credits exchanging between entities, as we sort of have, some will be over their goals and some will be under, and that will sort of create an excess or deficit that can be exchanged between entities.
Tegan, that's such a fascinating case study and work that you are building, which is so important as you see climate change, impacting and just being, the focus area of government and regulators and companies and consumers. So I think this is going to be an extraordinary work, and look forward to hearing more about it as you guys continue to build it.
We certainly hope so. Thanks, Amy.
Yeah, thank you so much, Tegan. We've tried to address a lot of the questions in real time, either directly in the Q&A or during our conversation. So thank you so much for attending our Blockchain Lunch and Learn today. We'd like to thank our presenters for an amazing job in explaining what blockchain is and how it's being used to solve some of our most pressing challenges. If you're interested in learning more about blockchain and DLT, or want to see what else we have in store for our programming, visit our website at digitalchamber.org, and keep a lookout for our upcoming event on April 15th. It's time to make blockchain a priority. Thank you so much. See you next time.